Hi, welcome to my Fractal Range YouTube channel. My name is Vaidotas, and today I have a great guest with me. So this is Ramadan. Hi, Ramadan. Thanks for agreeing to talk with me.
Of course, thanks for having me.
I'm quite excited because actually we know each other for quite some time. I believe we met 3 years ago, if not more. So we know each other way before my fractal range started. You were my mentee, so we studied together. And I think you are a perfect candidate for this interview because, as Raphael and I have said multiple times, the goal of these videos is to educate our users about the process, about different ways of trading, managing risk, using different tools, and so on. So, and spoiler alert, I know that you have created your own process, which is quite interesting. So I'm very excited to talk about it with you, but we'll talk about it later. So yeah, thanks again, and let's introduce yourself.
Yeah, so like you said, my name is Ramadan. I live in Toledo, Ohio. Go Bucks. So let me tell you a little bit about my trading experience, how I started. So like most of you know, I'm sure a lot of people did also, but I got into the whole crypto hype back in 2017 and, tripled my money in a matter of weeks, maybe 2 months. And I was like, wow, this stuff is easy, And then proceeded to make every single possible mistake you can make, from over leveraging to whatever. Every mistake you can think of, I've made it. So went through that and, started getting to a lot of economics and hard money. A lot of Bitcoin maximalists were like really hard money, Austrian economics and all that stuff. So I started learning a lot about economics and got really interested in that. And, while learning about economics and all that stuff, I met you through, ITPM and all those other programs where you started helping me learn about economic analysis and long short. And that's kind of when it clicked in my head, kind of that fairy tale land of technical analysis, trading on the beach type stuff was, went away. And like I realized how much work it actually takes to do this, but also like the potential and the reward, that the satisfaction that you get from, being right, being able to put your idea, put a bet on your ideas and, seeing how it plays out. So yeah, it's a little bit about me now, going in through learning your process, using your ranges, coming up with a process and all that.
Yeah, so we'll talk about the ranges and the tools a bit later. So you are also a CFA candidate, yes?
Yep, I'm a CFA level 2 candidate currently. Have the exam coming up soon, so we'll see how that goes.
Yeah, so actually it's great that you started talking about those mistakes. Yeah, because I remember when I started, I made all those same mistakes, and it was, of course, it was way before crypto. So at least here in Europe, the fastest way to lose money was Forex because, of those leveraged trading brokerages and companies that were offering leverages like 1 to 500 or something like that, 1 to 100 and so on. Yeah. So, so back in the day, I made all those same mistakes too. Okay, so let's talk about your process. How you think about the trading? What's your process? How you generate ideas? What you're doing? Basically, just tell people more about you as a trader. So, because as I know, you trade actively. So yeah, let's talk about that.
So the way I like to look at it, I like to mainly trade macro ETFs. I don't like to get focused with single stock names, and because the universe is just so big for single stocks. So if I could limit my, watch list to 200 or whatever macro tickers, and I get most of the big themes that I want, it'll be easier to track and analyze. So I like to break it down like that by asset class, by currencies, factor exposures, international equities, domestic sectors and industries, and then commodities. And the way I like to look at it is I just kind of scroll through everything together, have on like one watch list so I could like see the whole global economy, what they're doing, I guess. And the way I like to start is by looking at Sortino ratios, actually.
Oh, interesting. So basically, you're doing more of a bottom-up analysis or top-down?
More of a top-down. I'm looking at everything from a macro view, not single stock names. I'm looking at just the ETFs that have all those names in them.
Yeah. So first, you mentioned about macro and economics, I believe. So how you generate ideas? Okay. So you said you're trying not to trade with individual names, ETFs. Okay, but yeah, but how you generate ideas? What you want to buy, what you want to sell, maybe what you want to watch in general.
So yeah, so I start off by looking at the Sortino ratios of all these assets.
Oh.
I'll look at Sortino ratios on a multi-duration. So I'll look at it on like, let's say 20, 40, and 60-day duration. And I want to see a trend, the higher the duration, I want to see a higher ratio. Mm-hmm. So that would be a good indication, first of all, there's good reward per negative volatility and Sortino ratio. So that's how I like to start off. This will give me a good idea. If I start seeing some mixed signals there, I usually don't like to get involved in it or like trade against it. So we start there. And then after finding the best ratios, the highest ones over the durations that I'm looking at, I'll start digging deeper a little bit. I'll start looking at the trends and, start determining where I would get out based off these trends and what my level of risk is according to where the price is in relation to the trend currently.
Very interesting. So basically you're saying that the signal is more, in your process, the signal is more important than the macro or narratives and other. Yeah,
because everything is priced in, and if not somewhat. Mm-hmm. So whatever economic data is going in, people are acting on it already. So I'll be able to quantitatively tell them through my signals.
Very interesting. So let's talk more about your signals. What you're watching, what you're using to determine the strength of a signal and so on.
So I actually do have a signal strength also. And it's a combination of, looking at price trend and volume, looking at volatility, and actually it also has like a Hurst exponent to it also. So, seeing how persistent that movement is over a certain duration. So the signal strength also look at, but I want to make sure first that the Sortinos are in good trend. And then after I filter those out, and then I'll start ranking them by, signal strength, by, distance relative to the trend line, and so on.
Awesome. Actually, I wanted to ask you, why Sortino? Why you chose Sortino? And can you tell us more about the Sortino? Basically, what it is? Well, of course, people can read on Google what it is, but just in a couple of sentences, what it is and why you decided to use it, how you figured out that actually the Sortino is a great tool to use.
Right. So Sortino is related to the Sharpe ratio, which I'm sure more people are more familiar with. And for those who aren't familiar with, it's the formula for it would be the return of the asset minus the risk-free rate divided by the standard deviation. That's the Sharpe ratio. So if you're looking at something like, let's say, natural gas lately, that's had crazy volatility, that ratio might show a lower number because volatility is volatility, positive or negative. Yes. What the Sortino ratio does is the same numerator, return minus risk-free rate, but the denominator is actually only measures downside volatility. So it doesn't punish the ratio for any upside volatility, any, blasts up in price. So I I'm not going to punish anything for going up a lot, like, so I would like to see more downside volatility, and that gives me a better risk adjusted reward, in my opinion.
Actually, very interesting. Okay, and one thing just came in my mind. Okay, so what about a short selling and Sortino ratio? Then,
Yeah, so short selling and Sortino ratio, I would look for negative ratios in that.
okay.
Negative ratios also more negative as a longer duration,
Yes.
because you could have a, shorter term positive Sortino ratio, but the longer term is negative. Maybe that's a good shorting opportunity.
Yeah, but you do short selling too. You are not only.
Oh, yes.
Yeah.
I do long, short. I try to balance it out. I try to keep, if I feel like the market is getting more overbought and maybe I don't feel like reducing too much, I start adding some shorts on where I see potential weakness as a hedge.
Yeah, so you sort everything, and what's next?
So yeah, after I filter those out and look at signal strengths also to determine which assets am I actually going to start trading of my watch list, then I'll start using the ranges. So the way I do it is I use a combination, actually. I use a combination of my fractal ranges plus some other ranges that I have. And, I kind of combine them myself using like a weighted average of sorts and sort of start scaling in determining on where it is within that range. Also, at the same time, I'll be looking at, eyeball premium discounts and volume to determine how much to allocate at each time.
Very interesting. Yeah, and also, knowing how I enjoy talking about fractal analysis and so on, I noticed that you said that you're using Hurst exponent as well. And knowing how I use that and how I enjoy talking about it, so tell us more about it too.
So the thing about Hurst is I found so many different ways of calculating Hurst, and I'm not a coding genius, so it's hard to back test these kind of things for me. So what I ended up doing is kind of taking 4 or 5 different calculations of Hurst and kind of weighting them out and getting an average Hurst and using that.
Do you have some sort of a script, some Python or?
Yeah, so I do have a Python script that does generate these. You can find a lot of these online and other places, and there's a lot of YouTube videos for Excel. So it's just different sources, different Excel, different types of Hurst that I found. I don't know which one was best. But I knew I could see the importance of it and like how it does show persistence, but which one exactly I didn't know. So I'm kind of combining them for now until I figure out which one to cut off and keep and all that.
Yes, indeed. And also one of the most important things is, of course, on what data you are calculating that Hurst, because some people are calculating on prices, some people are calculating it on volatility and different types of volatility and so on. So basically the possibilities to do research are endless. So basically
it's a very complex topic.
That's why I enjoy this topic always, because you can meet a lot of different people who are using same tools, but actually not, because you can take 10 people who will say, oh, I'm using Hurst exponent, but when you start talking and you see that each individual is doing absolutely different things, and that's what excites me the most.
Exactly. Yeah. So the way I implement it is I kind of take it in comparison to what duration of Hurst I'm looking at and look at that price change of that duration and kind of do some basic arithmetic to add it to a signal strength to give it more power, more persistence, or less. So that's the way I kind of use it.
Perfect. So for your process, so every day when you're scanning your watch lists or positions or so, I believe you have some Excel sheet or Python script or something. So
Yeah, so I have an Excel sheet that we should take a look at.
oh, sure. Wait a second.
Yeah, I think you're gonna have to give me access to.
Yeah, now you can,
All right.
I believe.
Okay. So this is a little thing that I've came up with. Definitely like, combination of things I've learned from curriculum, from you, from other sources online. So I just kind of combined the best, what I thought was useful to see at one location. So the way I would break it down is by asset class, currencies, style factors, international, you got Europe, Asia, and sectors, industries, fixed income, and commodities.
Yeah, so basically you are monitoring broad market ETFs, so commodities,
Exactly.
currencies,
Makes it,
stocks.
yeah.
Okay.
Yep. I don't have the patience to deal with single name stocks and all
Yeah,
that.
what about style factors? You have them too or no?
Yes. So, I have by style. So, momentum,
Oh,
value,
awesome.
high dividend, low volatility. And then by a qualitative, private equity,
Yeah, I
IPO.
like those. Yeah.
And then size factors, small cap
Mm.
growth, mid cap growth, large cap growth, small cap value, etc.
Yeah. I see you have a lot of columns here, a lot of numbers. So let's talk about it.
Yeah, so let's talk about it. So the way I start it is, I'll add my position size, how much I'm actually buying. So let's just give you guys an example. Let's say I want to buy, let's not do this. Let's go to something like SPY. Okay. So say I want to buy 10. Okay. So I use a formula to determine my position size using, ATR and volatility and other stuff to come up with a volatility adjusted position size.
Okay.
So the way I have it here, so buying 10 will give me 4.5 position size, but my target based on the formula is 3.83. So once I get above or below plus or minus 1%, it'll start telling me, okay, you're too big, reduce, or it's time to add some. If it's telling me plus, add more than it's above, the difference is more than 1%. So I kind of use that to help me take some emotion out, I know what position. Now, it doesn't mean I have to start with this position size, I'll start looking at where we are in the ranges and stuff like that.
So basically these first columns and the formula basically answers the question, how many shares to buy, what position size to enter.
Mm-hmm.
Yeah, but it doesn't answer the question when to buy. Yeah.
No, it's not when, it's just, so I know how to hold on for a longer, so I could stay with the trend longer. So this will give me a little bit of discretion as like going in and out, but as I'm building up the position, no, this is more for maintenance of the position, not for like, because you never want to start off with 4.5% right away, right off the bat, you want to slowly go in. So that's when I start looking at, where we are within the ranges. Short term we're closer, but long term we're closer to a top. So, definitely don't want to start building a position here.
So what you have here, combo range.
Yes. So this is the combination of, these are my fractal ranges, short term and long term. And then this is a delta range, delta variant range.
Okay. Interesting.
Yep. And, so that's how I'm looking at it, as for maintaining to get the emotion out of it. The Excel sheet tells me when to add or subtract from my position. I don't like to get too emotional or get too involved in the decision making. That's why I kind of made this, to help automate everything.
Yeah, so basically let's take an example. So based on something you decided that you want to buy SPY, when, what you look for in those ranges? You want it to be in
So we
30% or 50 or what?
So I want it at least to be blue. You see how
Yeah,
it's
yeah,
all color coded. So you want to at least, start getting to the blue shades right here, These are where you could start seeing some, start some oversold signals here. But not just that, we would have looked at Sortino ratio, but we also start looking at the volume, volume is its price has been going up, but like volume has been starting to come down a little bit. So maybe it's like a little bit of a warning sign. We're starting to see some discounts and volatility premiums or discounts. So it's a little bit of a warning sign. So maybe you there's got to be some discretion. I don't have it completely automated, but this is where the
Yes, of course.
discretion comes in, is knowing how to start off and building off your position. But once you get a nice position in, this is a good way to help you maintain and like sell high and buy low, while keeping a core position.
Yeah, very interesting. Yes. Okay. So basically, majority of those numbers tell you how many shares to buy and when to buy. And actually, because the focus of my fractal range and is basically to provide people with tools to manage risk and to avoid losses. And yeah, so basically more for market timing. So that's why now I want to focus our discussion more about that, because of course I want to help our users to understand how to think in different ways, how to think about the ranges. Why is it important to not trade blindly and to have at least some understanding of volatility and what is happening in the asset? So that's why I want you to tell us now how you, so you said you are using my fractal ranges, so you are a subscriber. How you think of those ranges in your process? So basically what you are looking for and what needs to happen for you to be comfortable, let's say, opening a position or adding to a position or closing out some positions. So let's talk more about the timing and risk management portion.
Right. So I would like to see something obviously at the lower end of the range. So I start looking across here and seeing, I'm seeing a lot of blues here. So this is starting to tell me, okay, Asia is starting to look oversold. So maybe we should, if we have some shorts here, we should start covering some, So this is how I kind of look at the ranges, look at, if you find that the short-term and the long-term ranges are very similar, very close, I kind of give that more weighting to it. This is so like a stronger support level or resistance level or whatever. And if my other range is also confirming this also, it's just more confidence.
Okay, sorry, I think the important question here would be to tell the viewers, what is your time horizon usually? I mean, when you are trading, are you a day trader? Are you a swing trader? I don't know.
So I'm the kind of trader that stays with the trend until it ends. But at the same time, I'm daily dynamically adjusting my position size. So if I start seeing some green, I'm like, okay, I need to sell a little bit. So daily, I'm going in and touching my portfolio, buying a little bit more of this, selling a little bit more of this. But I'm still in the trade I could be in the trade for a couple months, it just depends on the trend. So, but I am daily going into the market, buying some, selling some, buying some, selling some, maybe not a lot, maybe a lot, just depends on what's happening, but I will be in a position for a longer duration.
Because what you did here is, I like it a lot, because for me it would be very useful, because like you said, if longer term range and shorter term ranges are close one to another, so let's say in your case it's both blue. How I would like to think it, that if I open that position, basically if I buy that asset near the longer term, low end of the longer term range, I want to hold it for more. Not
Right.
only time-wise more, but then movement-wise also.
Right. And or even go a little bit bigger too.
Yeah.
Yeah. So no, definitely that is that does have a play in it also. But that's also why I like to start adding other things in to confirm also, you know, when if is this a major shift in trend here? Is this big, you know, longer range and shorter range term together? Is this showing a more of a dramatic shift in the whole trend? So that's when I start like adding other things in to determine that. But as for like position sizing and risk management, it's what I like to use the ranges for.
Yeah, actually, what I like here, and actually what I will experiment myself after our interview is ways to come up with my own combination. Actually, I like that somehow you manage to combine different ranges into one indicator, and actually
Yeah.
it's quite exciting for me. And I think I will remember this idea and will experiment with this too. And hopefully our viewers will get some ideas off of it too.
Yeah, I mean, it's like you said, just same math, same data, but different people have different ideas and different ways of analyzing.
Absolutely.
Yeah.
That's why we're making those videos, and that's why I want to talk with more and more users, traders, and so on, because there's no such thing as, oh, if a person is using Hearst, it means all people who are using Hearst are doing the same thing. Not at all. Or
Exactly.
ranges. You can have the same tools. For example, my fractal range. What I noticed now that you can take 10 people who are using my fractal range, and they all have their own ways of using it, and it's awesome. And I'm very happy about it.
Yeah, I mean, you could even do this without the third. You could just do like a combo range with these two. So yeah, absolutely.
Yeah. So also, our goal is, of course, to always improve our tool, our service, and so on. So now I would like to maybe ask you about what features of all the available features now, what are the ones that you find most useful ones, and also what would be your suggestions for the future development of a product, of a service, and maybe you have some suggestions also. So because it's very important for us to hear the feedbacks, and also maybe for our viewers to hear what our users are doing. So basically this question has two parts. First part is what you're doing now, what on my fractal range especially. So what, how you are using it, what features are you using it, and the second part of the question would be what you want to be added, of course.
So right now I mostly use it for the ranges. I like to look at the volume, but you know, volumes, I'm able to calculate that by myself.
Yes, of course.
So I mostly use it for the ranges. I like the visualization of it, so I could see where it is like on the charts and all that stuff. But where I would suggest something that we could use is maybe in like an Excel add-in or something like that to more easily plug this data in. You know, just type in a ticker, you get the ranges for them right there and then, you know.
We are thinking about API maybe, because it's quite a difficult task, and of course so maybe next year. So yeah, API is planned, but of course it all depends on the amount of free tickers user has and so on. So let's put it this way: it's quite a big technical task, so it will take some time, but we have it planned. But actually now, so you are typing a lot of manual work. Of course, you are not showing it here, but somehow you are taking all those ranges into Excel. So it's quite difficult.
Takes some time. It takes some time for sure, but you know, it's the people who put in the work between after 4 p.m. and before 8 a.m. when the market's open who are successful. So it's just putting in the work and the time that.
Absolutely.
So if we automate that would make things a lot easier.
Oh yeah, I know. Of course, we understand that. Uh, okay. Anything else you want to tell about your process trading?
I mean, though, I just like to have also overview of like my portfolios. You could see up here, like, long shorts and like where the assets actually allocated, as well as like correlations of the whole portfolio and the beta of the whole portfolio compared to these things. So I just feel like it's important for people to understand also, like, yeah, you could be not, you could have longs and shorts, but if your shorts are also negatively correlated to the dollar, as well as your longs, where you still have some risk exposure that you're not seeing. Just because you have some shorts on, doesn't mean that you're hedged. So just for users to get an idea of, looking at the whole portfolio construction also when they're doing this, as well as like risk managing dynamically, your portfolio is highly correlated to dollars or negatively correlated to dollars, and you see that dollars oversold, you want to, maybe start reducing a little bit in your portfolio just on that signal of the whole portfolio construction, or see where your correlations are stronger, just stuff like that. But definitely for the risk management, you want to pay attention to where you are in the ranges, because trading without ranges is like trading or fighting blindfolded. Like, you don't know where you are within the probable ranges of things. So once you get an idea of that, you start getting an idea of where I am and how do I prepare, how do I position size and accumulate.
Yes, exactly. So you mentioned correlation. So we're using correlate. You are using correlation as well, yeah? I'm not the only one who is using correlation. Yeah?
No, yeah, correlations are definitely important, but also the thing is with correlations, like everything, it's not linear. There's different durations,
Absolutely.
correlations change. So it's important to
Yeah,
constantly
so
update them
I
and
will
make sure.
put it this way. What's important, and not only with correlation, with a lot of things, not only in markets and in life, but especially in markets, what's important is how things change. So the rate of change, how correlation changes from one day to another, and so on. Actual number of correlation today. So let's say one asset's correlation to another today is will not tell you anything if you don't have some history of that correlation.
Right,
Yes,
right. No, for
exactly.
sure. Or having a time series. And funny thing, when you see time series of correlations, they have this like little, time wave thing, because they'll be very correlated and they'll be less correlated. And
yes, it moves in cycles, and and actually it's a good thing. At least I think that because of what you mentioned, it's really important to spot the changes in those cycles, because usually correlation, first it goes up, then it goes down. First it goes up, then it goes down. So it's important to spot when the correlation cycle begins and then when it ends. And at least how I do it, then it helps me quite a lot to restructure my portfolios, to adjust everything and so on. So that's why I'm using this correlation, and that's why I'm posting different correlation tables every day, because and sometimes some people ask, oh, how to use it well, and the answer is always the same. If you only have today's number, it's almost useless. Not useless, but it's not as useful as if you have historical data of that, of course. So that's why plotting it every day is really important.
it is
Awesome. So as a trader and so on, what, in your opinion, what are the three most important aspects if you want to become a successful trader? Trader, investor, money manager, managing your own wealth, doesn't matter. What are the three most important things?
Three most important things. Well, risk management is definitely up there. If you need to know how to manage risk, you could bet on anything, Dogecoin, Shiba, whatever. But if you don't have proper risk management, that's where the mistakes start coming in. So I'd say having a good process that has a good risk management underlying to it, so good process, good risk management, and You need to be, honestly, this is it. You need to be open-minded. Always be
Yeah.
prepared that you could be wrong. Always be prepared that you can be wrong. And that's what will help the risk management. Knowing that, don't get too overconfident. Don't get emotionally attached to anything. Just
Yes.
be open-minded. Be completely, radically open-minded. Like, I could be wrong at any moment.
Yes, exactly.
Yeah.
I don't know where the asset will go tomorrow, whether it will go up or down. But the most important thing, that's how I would put it. The most important thing is to know what I will do if that asset will go down, and what I will do if that asset will go up.
And have a process for that.
Yes,
Have a process
yes,
for
yes.
that. And, risk manage that process, and just be open-minded that you could be wrong.
Okay, anything else you want to add? Maybe some advice for other users of the tool and other traders, and basically, if you want to say anything to our viewers, now is the time to do it.
Just keep learning, keep open-minded, try, take in as much information as you can that's useful, and try to figure out how to combine it with what you already know, and try new things and see how it works. I think that's the most important. Just keep, because markets are evolving. You gotta be able to constantly update your process and how things are going. Yeah, that's it.
Yeah, so thank you very much for this talk. Actually, it was a great talking to you, and actually, now I have some ideas and some thoughts what I want to experiment with and so on, and hope that it's useful to our viewers, and hope I'm not the only one who will try different things and different ideas just because of this video. So yeah, thanks again for agreeing to talk with me, and good luck with your trading. And to all of our viewers, thank you, and see you on the next one.
Thanks a lot. See you soon. Bye.
Bye.